Hi there. Great news for Alibaba shareholders. Despite this bad performance, year to date the stock price is still down 1.4%, and of course, from its highest peak, the stock price is down over 76%. There are some great news you have to know, which are the buybacks. As you can see, yesterday, on July 2nd, 2024, they updated their share repurchase program. And as you can see in this table, the number of shares outstanding have continued to decline from 2.6 billion to 2.3 billion. A decrease in the number of shares of more than 9%, almost 10%. And as you can see in the last quarter, this quarter, the second quarter of 2024, they used 5.8 billion for buybacks. And you can see their past buybacks. They start in 2022 with 2.1 billion, then 3.3 billion, almost 2 billion, 3 billion, 1.7 billion, 2.9 billion, 4.8 billion, and then lastly 5.8 billion. They use all this money to buy back their shares. And guess what will happen in the long term if Alibaba continues to do more buybacks? The number of shares will decline to less than 2 billion, or maybe close to 2 billion. Guess what will happen to the stock price in the long term? If your answer is that it will go up, then you are right. The stock price is likely to go up. Moreover, they still have, as you can see here, the remaining amount for share repurchase program was 26.1 billion as of June 30, 2024. So they still have 26 billion to do more buybacks. And this is amazing because if you look at the current market cap of 178 billion and compare it to the money they have for buybacks, 26 billion, is still a lot. So far, you have a decrease in the number of shares of almost 10%, and they still have 26 billion for buybacks left. And this is amazing. And do you know what's interesting? When the number of shares keeps going down, the earnings per share will go up because the total earnings will be divided by less shares, a lower number of shares. This means the earnings per share, as you can see here, or diluted earnings per share, will go up in the long term as they continue to do more buybacks. And this is quite great, amazing for shareholders and especially for new investors who want to take advantage right now to buy at the lowest level of $73. Of course, the stock price was even lower in the past, of about $68. But then, as you can see, it went up when they reported the results. They announced other great news. But then, as the market behaves, the stock price goes down. So if you are planning to invest in the short term, the stock price can do anything. You might see another increase of 20% or almost 30% in just a few days, and then the stock price to go down. So that's why, if you are planning to invest in the short term, be ready for more fluctuations. Anything can happen. But in the long term, the outlook looks great, especially as they are doing a lot of buybacks and they are planning to do even more. Plus, they're also paying a dividend of about 2%, almost 2.7%. Then, if you look at China, GDP, the annual growth rate, you can see this amazing performance. In the last quarters, they delivered a nice growth rate, over 5%. In Q1 2024, 5.3%, Q4 2023, 5.2%, and Q3 2023, 4.9%. So it looks like it keeps going up. Especially if they report another increase in their GDP of over 10% or almost 18%, and for sure all Chinese stocks will go up. Now, there is also risk, that is no doubt. Geopolitical risk, trade war between the US and China, and other bad things that can happen in China, such as regulations, new rules, new laws that can affect Alibaba, and of course other Chinese companies such as Tencent, JD.com, Pinduoduo, and others. That's why you look at the reward, what can you expect from this business, assess the reward, and also the downside, what can go wrong. And then you decide whether you want to invest in this company or not. For me, Alibaba, it's a good investment at the current level. But maybe for you, it's not, because maybe you don't like China, you don't believe in its future, despite this amazing annual growth rate in their GDP. You can see here their past performance. Look at the last 10 years. Their GDP was growing by 7%, then the growth rate went down in 2020 because of the pandemic, then it has rebounded to 18%, and then it has stabilized to more than 5%. And this is great. If they continue this way, all Chinese companies will go up. Of course, there is also competition between Alibaba, JD.com, Pinduoduo, and other small players. You also have to be aware of that competition. But so far, the way Alibaba looks, if you look at their segments and look at each one to see their growth rate, you can see Taobao and Tmall, a growth rate year over year of 4%, Cloud Intelligence, a growth rate of 3%, and by the way, they announced in the last earnings call that these growth rates will improve in the future. They are likely to report a double-digit growth rate in the next quarters. If that happens, and you also look at the other segments that they have an amazing growth rate, the stock price is likely to go up. And on top of that growth rate, you also add the buybacks, a decrease of almost 10% in the number of shares, plus 26 billion left for other repurchases, then the stock price is likely to more than double from the current level, quite easily. But of course, you also have to be aware of the risk. Anything can happen. You might lose all your money if China goes to war or other crazy things. Who knows? Anything can happen. That's why you have to be prepared. Be ready for anything. And then you take advantage when you see such great bargains. For instance, Alibaba or Tencent or JD.com. There are more companies in China. So it's up to you if you want to take advantage of this company and look at the number of shares as it keeps going down. This is a great performance, a great indicator. So if you have other questions about Alibaba, about their segments or China in general, what you think about China, if you are afraid of the risk, geopolitical risk or trade war or other things, then let me know in the comments and maybe we can learn more things together. So that's it, and I'll see you in the next video.